that we love questions from the audience. So you can start commenting your questions now, or you can also add them as we go. I'll be right back on to welcome our guests to the show. Thanks for meeting us for coffee. Watco Logistics makes supply chains simple. Whether it's rail, road, river, ocean, or intermodal, they manage your supply chain with efficiency and care. From heavy haul trucking to e-commerce fulfillment, they tailor solutions that fit your business, no matter the size or the complexity. Watco combines smart technology with real human insight to keep your cargo moving and your operations running smoothly. You can learn more about their full suite of services at watco.com/logistics. Can you hear me now? Thank God I have a producer. He's sitting behind the scenes like, you cut, nobody can hear you. Thank you, Aaron. You're always appreciated. And I always have my guests get on early with me behind the scenes so that we make sure everything's good with sound check. And every time I tell them it's never because of you, it's always because of me. So I'm just proving myself right today. But thank you everyone for listening in. This is episode 54 of the Meet Me for Coffee podcast. 54 means I've been doing this for almost 2 years and I still don't know what I'm doing when it comes to technology. That's okay. At least I know how to talk. Good morning, Claudia. Thank you for being here. I'd love to know if you guys are listening in, where you guys are listening in from this morning. Appreciate you guys being here as always, and love to know what states or what countries even sometimes are represented on the show. Just real quick housekeeping. I think the only announcement we're going to make today is that the GOC Inland Distribution Conference is coming up soon. It is in Chicago, September, I believe it's the 29th to October 1st. So the very end of September. It's a great way to kick off your fall conference season. And if you use code COFFEEINLAND25, when you guys register, it saves you 15% off your registration. So definitely a very affordable, very convenient, easy to travel to conference with a great group of people. Inland distribution, obviously kind of true to name. We're talking a lot about inland rail, drayage, OTR, distribution. And so it's a lot of fun. It brings together the railroads, drayage carriers, truckload carriers, warehousing providers, and a lot of shippers. So everyone's there represented in the same room. And I will be moderating a panel. I've seen some awesome speakers on the agenda, so it's just going to be a lot of fun. And we'll also have a podcast there, so I hope you guys can attend. And if you are attending, make sure you let me know and see if you'd be a great fit for our podcast episodes. Okay, without any further ado, I want to go ahead and bring on our guest, Taylor, this morning. Taylor, thank you so much for being here. Is your audio working?
I can hear you. Yeah, thank you for having me.
See, that's always me. So thank you for making the time this morning. I'm looking forward to the conversation. Typically, we talk a lot of markets and economics, and we've been really heavy on those topics here for the last couple of months. And so every once in a while, I like to kind of deviate away from that to talk about kind of overarching themes that are very relevant to our industry as a whole. And so I appreciate you being here to talk to what I think is a very relevant trend right now and theme as far as risk and insurance and goes in the truckload space. So thanks for being here.
Thanks for having me, and hopefully we can make insurance a little bit more fun.
Well, why don't you go ahead and start us off with a quick introduction and let us know a little bit more about yourself and who you are and what you do.
Yeah, I'm Taylor Walker. I'm the Chief Insurance Officer here at Loadsure. I've been with this group now for right around 4 years. In my role here, I oversee the products we build and go to market with and our overall underwriting relationships and distribution in the marketplace. I went to a maritime college, studied the supply chain, and sort of landed in insurance, which seems to be a normal way to get into the industry. But it's a great market, and I really was fortunate to get to work with a lot of great people and learn from them along the way, and then come to a place that we can develop and build programs and different ways of doing business to try and make it a little bit easier for everybody.
Awesome. And you are now at Loadsure. Can you tell us a little bit about who Loadsure is?
Yeah, so we started as a embedded insurance play for kind of spot freight. So living in the TMS ecosystems where all the movement was taking place, with the understanding that a lot of the freight that was getting shipped didn't necessarily have the right kind of insurance or insurance at all attaching to it. And that proved to be a big opportunity in the marketplace where we could sit in those ecosystems and facilitate it. And we've really evolved a lot from there, where we serve all three pillars of the supply chain, working with shippers, freight brokers, as well as the carriers. And it gives us a really unique blend of what's happening in the market and lets us serve all those customer bases really well. So it's been a great experience for us, and we've expanded from there, and we've sort of become more of the cargo specialists in that space and are continuing to evolve products to support the needs of the market.
Awesome. Thank you. And good morning to David from Portland, Maine. I've never been to Maine, so let me know the best month of the year to visit. If I'm ever going to visit, I need to go at the best month, because I feel like that's one of those places that you have to plan it right.
Summertime trip for sure, but
yeah,
good way to get a lobster.
Okay, well, I want to start today off with I don't want to bore people too much, but I also think that in general, when we're talking about insurance, it's probably not something that a lot of us are super well versed in. I'm including myself in this. So I thought maybe we could start with kind of a little bit of insurance 101, if you will. So I was wondering if you could kind of tell me a little bit more about who the major players are in the insurance marketplace and what the difference is between like an insurance broker and the insurance underwriters.
Yeah, absolutely. The amount of confusion across the industry of this is always surprising to me, but I'm in the industry, so it's easy for me to get it, but people don't always understand it. So if you ask somebody who their insurance is from or who their insurance provider is, they might name the insurance brokerage or agency, and that's not who holds the paper for them. So you have your insurance agent or the insurance brokerage that they work within, and that's who you go to help you buy the insurance. So a great example in that space would be Reliance Partners. You could go to Reliance Partners and you could work with a specific agent at Reliance Partners, someone like Jesse Merritt. And then Jesse's going to take your exposure and get to know you as a business. And what you want to do is really make sure that that person is your best friend in the world for what you do. Yeah. They need to understand it because their job is making sure that your tolerance for risk, so what comfort do you have with the risk you take day to day as a business, is met with the right insurance provider or underwriting company. And the match is sort of like being a matchmaker. And the more they know, the better they can help you with that. So you want to really dive into all the things you do as a business, how you prevent losses, how you run your day-to-day operation, and don't just think about the basic brokerage side. You need to make sure they understand how many employees you have. Where are your employees based? Do you have offices? All of those things are really important. And then your insurance agent and that company is going to tell your story to a bunch of different companies. If you go to a good one, they'll make sure they tell us the story and we'll get a shot at your business as well. But they'll do that. They'll go to the marketplace and they'll shop for different policies and structures that they can uniquely build together to help you as a business. And then they'll help you understand what those options are. And they'll do things like a coverage comparison. They'll outline the pricing, the pros and cons, and they'll be there as your support. And a lot of the times they'll even facilitate the conversation between you as a business and the actual insurance underwriters to help us understand your business better, because that's really important. But those are the two core parties in that insurance agent relationship. The underwriter, and if anyone has questions or you have a question, just stop me, because I'm
tracking.
So your underwriter would be someone like me, and I get to sit there and make an actual decision about whether or not it's a good risk. So my first kind of three pillars are, I have to decide and make risk selection. So I want to understand the management. I want to understand how they care about their business, and really get to know who it is that I'm partnering with, because that's what we look for. And then I'm going to price it. So I'm going to determine the right price for the risk I'm taking. And then the third kind of pillar of it is really terms and conditions. So what is the actual policy going to cover, and what changes need to be done to make sure it's a good risk for the profile. So that activity is what you do as an underwriter. And you're typically writing as an underwriter at an insurance company or a carrier. So you could have Travelers is a great example. A lot of people in the market are very familiar with Chubb, AIG, Allianz. Those are all insurance companies. And then you have groups that are specialists in certain fields that are called MGAs. That's what Loadsure is. So we are an MGA, so we're a managing general agent. So we're authorized to write insurance as underwriters on behalf of other insurance companies that might not specialize in that field that they want to grow in. So you have Loadsure, another great example is Falvey, and we're kind of specialists in our niche, and we're empowered by those companies to make these decisions. And we typically will hold claims authority for the lines of business we write as well. So those are kind of the two main groups. And then what you won't really recognize as a customer of those groups is that there's other parties, such as reinsurance companies, on the backside of these that really drive a lot of the market conditions and changes that come up. So you'll have an insurance company will be comfortable with something, but then they'll take a portion of it and they'll push it out to the market as a reinsurance structure to help protect their balance sheets. And in that process, when a reinsurance provider starts kind of forcing changes into policy wordings or into different coverages becoming a little too scary, you'll see shifts in the marketplace that follow with that over time.
So curious, as you said, I think you've been with Loadsure for 4 years, but kind of over the last 4 years, what have you seen kind of evolve or change, whether that's on that reinsurance side or just from the underwriter perspective, as far as, what I guess risk aversions or risk thresholds have kind of evolved, or if there's different practices now that are coming into play in the insurance space to say, hey, as this demand has changed, here's how we're evolving to meet it without overexposing risk? Like what has changed in the last few years?
That's a great question. So in all of the insurance marketplaces, you have a cycle that takes place, very similar to how you have a freight rate cycle, which ties back to how much capacity there is for things. So in the insurance lens, you're getting the reinsurance is ick to understand. Fair, yeah.
I know, I saw that comment.
Yeah. Insurance for an insurance company is a good way to think about it.
Yeah.
So that market cycle is different in each pocket, and really what drives it are kind of systemic things that plague a marketplace or drive everybody's portfolio to see kind of widespread losses or challenges arise, and that'll start shifting it. So an example could be catastrophic weather events is a really good example that it's easy for people to understand. And if you look at homeowner insurance policies in Florida, they get more expensive. All of coastal US is also getting a little more expensive. Well, that's because of the reaction to kind of that risk evolving over time and becoming more and more difficult for insurers. In the freight market, it's seen best right now in theft, and it's being addressed by a little bit of a swing in the market cycle that you can see where you're getting asked a few more questions on your applications. Probably people are diving in a little bit to your actual vetting practices. You might get asked for your SOPs on file. All of those things are more indicative of kind of a hard market churning. And when you think about it, it's all tied back to, well, if everybody put their hand up, if they've had an issue with strategic theft or theft in general in the last 2 years, a lot of hands go up. Obviously, people don't want to admit that they've had those issues, but
right.
We see loss runs for a lot of companies, and it gets to everybody at some point. If you manage to avoid it forever, you're a genius. But that drives a change. And so you see that now today in broker policies. They're typically seeing sublimits or aggregates. So a sublimit is a reduction in your policy's limit for a specific risk. So I sell Samantha an insurance policy for all the cargo she moves as a freight broker with a $500,000 limit. But then I say, oh, but Samantha, your theft exposures are sublimited to $250,000. So even if you have a $400,000 accident, you're only getting that $250,000 limit to you on that one. And then they come back and say, okay, we're also going to give an aggregate limit to it, which means in the course of a full calendar year of your policy, so if you bought it on April 1st, you could only have that much loss attributed to that peril. So if it's theft and an aggregate of 250, that whole policy year, you can only have 250 in losses before you erode it all the way. So that's some of the things that you're going to see, and you'll see those sublimits pop up in other places. But when you look at your policies, sometimes it's actually giving you more insurance coverage. Yeah, absolutely. And adding a higher deductible for those losses as well is very, very commonly seen right now. And that's also very normal in different areas. So if you operate in a lot of cross-border trade, you might see your deductibles higher for that cross-border trade.
So what about the brokers or the carriers who are operating in high-risk markets? And I'm thinking specifically of two that I've seen the last couple of years, one being alcohol and just like the amount of theft happening in the alcohol space for like finished alcohol products. And then the other being produce, which is just a super common industry for rejections at receiver, right? Where, instead of saying, oh, we just won't take this one pallet, like full loads of, fresh berries are being rejected for discrepancies basically between receiver and carrier. So these are really hard for brokers to navigate because they're just constantly consumed with claims processes. And so how are they faring right now, like in the insurance marketplace, when an underwriter looks at someone who says 98% of my freight portfolio is produce or is alcohol? Like, what does that do to their process?
So that's a really good question. I know that's one for you personally that hits home. Mike Kennedy, who handles our partnerships and does loss control work, hits home for him because he's played in that space a lot. It changes your view. So as an underwriter, you're looking at a lot of different things, and it's when you're trying to decide, am I making a good risk selection for my business? You're looking at the commodity mix, the limit exposures, and their history with it. So I like to constantly bring it back to storytelling and making sure that you can tell the story of what you do. But it is so challenging right now, and it's the list goes further than that. To be honest, energy drinks are probably one of the most difficult areas, and it gets even exacerbated because the way that shippers and receivers play in produce that you know so well, they also do that on energy drinks. Like, I don't, the 16-year-old kids buying Red Bull every afternoon at the Cumberland Farms or the Quick Trip or whatever, they're perfectly happy to have bought it, even though the box might have been scratched or someone had opened the truck and then closed it again. So maybe loosen up, Red Bull, and give everybody a break. But it's all of those things, they compound. So the more diversify what you do is, the better your risk looks. The more concentrated we start looking into, well, do you have a specialist that handles that? Or are you kind of a niche brokerage and that's your focus area, or a niche carrier and that's your focus area? And more often than not, what we sort of go to next is, well, what are the coverages you're looking for? Because if you're not looking, as an insurance provider, if you're not looking for the coverages that become scary to us and you're taking that risk yourself, that makes it a pretty manageable conversation for us. That's a lot easier. So I would caution brokers, though, because I get to see a lot of the motor carriers coming in to buy insurance. And when you ask that question about, do you have reefer coverage? That's not where you should stop that question. And you might want to just say, could you send me a copy of your endorsement on your policy for it, or your declaration page? Press a little bit more, or partner with someone that can help you press a little bit more. You can ask your insurance agent to help you with that as well if you work with a good insurance agent. If you work with someone that's not in the space, they're not going to know to help you with that process. But I've had these conversations with a lot of really good insurance agents, and I don't even have to ask the question because I'm getting it handed to me. Here's how they vet the carriers. Here's the process they go through. They'll be used to kind of working through that, and they'll oftentimes be closely tied into a lot of motor carrier policies that they'll have the ability to reference it. But I rarely ever see a motor carrier actually request broken seal coverage on a policy. So if you're using anyone under 50 power units, there's probably a good chance that they don't have that coverage on their cargo policy. And then their reefer coverage, there's a really good chance that they don't have any form of driver error on it. And so you constantly kind of run into it. And so you can request the COIs, and if you think that's pulling teeth, getting any sort of kind of deeper dive is more like a root canal. And nobody wants a root canal, so that's awful. But there's things you can do as a company, and there's people you can partner with from a tech standpoint that can support that. And there's also things you can do to put in your agreements with them that protect you as a broker. And as long as just because their insurance doesn't pay for the claim doesn't necessarily mean that you can't recover against them. So you can add other things into your carrier vetting processes and dig a little bit deeper into, are they using factoring? Are they using a payment network? Are they properly verified and going through the process with connected ELDs? There's so much you can do that when you get with a good insurance provider, first with the agencies and then with the underwriters, you can get loss control services that are really helpful in that space. So we do a bit of it. Travelers does a lot of it. Falvey's got a team that does some of it. And those things can really help you. And so being engaged and knowing who your insurance provider is and asking those questions is helpful.
I think unfortunately a lot of people don't learn about what they should have done until the claim incident comes up, right? So they're hearing these things that you're saying, and unfortunately maybe they're like, yeah, I know that because I learned that the hard way, or they're like, I've never heard that before, never considered that before.
We work with people after the hard way though, and sometimes that's when you're the most fortunate as an underwriter, because you sort of benefit from someone else's mistake. So somebody else had the claims and paid the claims, and the company's now changing, and we can't kind of wave a magic wand over all of the historical claims, but we wave a magic wand over a lot of them based on the changes you're doing as a company, and then we support that process. And we've done really creative solutions in that space where people have struggled with theft, but we've been able to kind of work closely with them and some of the providers they have in the market to say, hey, what's the tech layout you have? Let's dig into this a little bit more. How do you send a rate con out? Do you use load boards? That's always a little scary. And then work around it and say, okay, here's the plan moving forward. And we can reduce your premiums equivalent to those costs sometimes because it's going to change your risk so much.
Well, I want to ask you another question. And I'm going to kind of, I mean, this has been a few years for me now since I've been in brokerage, but I had a lot of clients in the enterprise kind of shipper marketplace. And so there was a lot of legal contracts that you had to sign to be able to be in their network, and you had to get set up and you had to agree to things. And a lot of these legal contracts reference the specifics of the COIs that they required you to have. And I noticed, over my 5 years in sales that there was a progression of requirements as far as like the terms. So it used to be like, you only needed $1 million in liability. And then we were seeing some policies that were 2, 3, some were even like a total of 5 million in total liability on some of these. And then also like cargo, I experienced several where they were asking for more than 100,000 as your standard policy, but there was just some other things that were cropping up. Workman's comp, I think I remember coming up. And then we even got into an argument once in a setup process with a Fortune 5, which is terrifying, because as a broker, they were asking us to have something on our COI that our insurance agent was saying, we can't give that to you as a broker. That is only for carriers. But the shipper just like didn't understand that, I guess. And they were asking us to put something on our COI that was for a motor carrier. And so it felt to me like there was so much change going on in the shipper landscape, and all of it I had to imagine was just a complete like aversion to risk. Like they just didn't want to deal with it. So it was getting kind of pushed downstream to their partners. So what have you guys seen in that space? And have we come up with more kind of creative solutions to help brokers who are playing in these marketplaces be compliant, but also like not pay, an arm and a leg to be compliant with these terms?
Yeah, it's so there's so much there to unpack. Trying to pick the best part to unpack first. It's like a big suitcase. I would say kind of unzipping it would be the first step, and that would be what causes that in the first place. So that same insurance cycle of soft and hard markets happens for shippers, and it happens in the products that those shippers have. And then it creates somebody sitting in their legal department having this great idea to say, yeah, you know what? Those things, let's pass that downstream. And you see it in cargo. You probably saw it, especially for your tenure there, a lot after that 2018 range with those big guys where cargo responsibility really shifted into brokers and carriers. Yeah. And that was driven by the hard market from an insurance landscape for shippers. So their rates were going up massively, and the underwriters were pulling back in the marketplace. And what that led to is a lot of the shippers saying, you know what, I'm okay not insuring my domestic transit exposures on my insurance policy anymore. I'll just push it downstream. I'll take it in-house, or I'll take a $250,000 deductible and I'll just change my requirements to carriers. And when the freight market is having a little bit of a down cycle on rates, they can do that pretty well without paying anymore. So for them, it's just cash savings across the board. And those shipper CFOs and risk management, they're judged every day by what are you doing for me today, saving us corporate money. So you're a big fancy risk manager, you better be showing me how you're saving me money every year. Same thing for the insurance agents they work with, save me money. So that sort of leads to that push of what the legal teams start trying to jam into contracts with people. In terms of what we see, I think the weirdest thing I've started to see is occasionally we'll have someone reach out and say, hey, I was told I need a 5 million workers complement. And I just don't get it. Like, for what exactly do you need that for? It's kind of a state regulated play. And we push them back to we say, listen, we don't support that, unfortunately, but talk to your insurance agent. If your insurance agent can't really give you answers or talk to you about it, we can give you recommendations of good people to work with. And so we'll do that a lot. We'll kind of push them the direction of our preferred partners that we respect a lot. And the challenges they keep running into, it cycles more and more. So we're really tied in on the cargo side. So those shipper requirements on the cargo side, when you don't even have the contract yet, or you don't know the volume on the lane you're going to pick up, that can be really scary for you as a smaller or medium broker. Right. And that's something that I would really suggest reaching out to us to support you on, or having your agent reach out to us. We can set up structures and policies on your cargo side that allow you to just kind of utilize that when you need it. So you can test the water with that shipper. You can have access to it at a per load price, and you don't have to lock it in. You can just kind of come in and purchase and see how it develops. And then as that lane solidifies more, you can say, okay, I'm going to move that into my liability policy now. I'll name them on, I'll do a name shipper endorsement, and I'll make sure that I've got that there. But it lets you kind of test it out. The other thing that kind of has shifted because of some of these changes is the concept of liability. So as a broker, a lot of the time what you buy is you're buying a liability policy from a cargo perspective. So when you get a primary or a contingent, they're both liability policies. Contingent is just backing up when someone else's fails. So contingent cargo insurance means that you're first relying on the carrier. That needs to fail or have some other issue before your policy will respond. If you bought a primary cargo liability policy, it's protecting you, and it's first dollar, first protection for you, but it's still liability. So they'll look to demonstrate your liability in the incident. And if your shipper didn't waive liability for whatever reason, or if you limited the liability with them, but the loss was bigger, that's where you run into those kind of push and pull scenarios. And the insurance companies, they're doing their job trying to defend you from a liability standpoint and say, well, you weren't liable, so we're all good here. We don't have to pay the claim. But freight brokers could put their hands up left and right, because those are your customers. Sometimes you do want to pay them the claim. Yeah. So our offering in that shipper's interest marketplace, it can serve as your cargo for the course of the year, and you can insure more and more of your shipments that way. And working with a good agent, we do a lot of this with Jesse at Reliance, where we're looking at these policies and we're kind of turning them on their head a little bit to say, hey, this gives you better insulation. Like, the policy is actually intended for your shippers and you're on the policy, versus it's intended for you and protecting your liability only. So that's just been a great way to kind of solve some of those challenges, and it gives us flexibility to create more opportunities in the marketplace. But other issues, the auto liability came up. Claudia mentioned that. I saw you tagged that one. That's really important, and I would expect to see more changes in what goes into those contracts, and really try and get engaged with your agents. And I had a great conversation with one of our agents about that this morning, actually, around the contingent auto space, because so much of the wording I've seen in the marketplace is a bit confusing, and it doesn't always tell you how much insurance protection you really have. And you sort of look at it and you wonder, is this actually going to cover me? The same thing you do with that, shippers do with it, and they might start changing what goes into the contracts. But you want to make sure you've got something, that's in line with your risk tolerance. So if you're engaged with one of these freight broker agreements and you're going through it, and you're also looking at things with your insurance agent at renewal, have those deeper conversations. There's a big difference between a contingent auto policy and a freight broker auto liability policy. And you have a lot of options in the market today. And you just want to make sure you get with a good insurance agent so that they can make sure they get in front of several different audiences and bring you those options back so you can have good informed conversations and make good decisions.
I feel like a lot has changed, obviously, in what's required, but there's also a lot changing, from hearing you describe it and what the options are for brokers to create policies that better insulate them from risk, but are also dynamic enough to be, like you said, kind of lets you trial new shipper clients, kind of lets you pay as you use it type of policy. And I remember also evaluating the primary versus contingent based on what you think your needs will be. And Jesse is fantastic. Graham Gonzalez is also over at Reliance. I worked with both of them in my past brokerage life. So definitely, I even would just say, if I think back to one of my first jobs in the industry, I was an account manager for an LTL freight carrier, and I was working with shippers, but I came to realize how much your account manager or your contact, in this case, your insurance agent, matters, how well they advocate for you, because it's really hard for a shipper to understand all the ins and outs of NMFC classifications and reclassifications and all the things, and LTL tariff pricing and base rates and czar lights, and how well of a relationship I had with my shippers and how much I was able to collaborate and advocate internally for them definitely determined the pricing that they got, the service levels we were able to provide based on that collaboration. So I always kind of go back and think about that when I'm thinking about things like, how do you interact with your vendors? So kind of on that note, we're getting kind of past time here, but what would your advice or your recommendation be to a broker, maybe even a carrier that hasn't really closely evaluated their insurance policy in a couple of years? Maybe they've kind of been like, hey, if it's not broke, don't fix it. And we've just kind of been running like this and we keep kind of renewing the same terms. Would you have advice to them? Or also, a second part of that, are there any red flags that brokers or carriers should be looking at too in the insurance space right now?
Yeah, being as proactive as possible is really important today. And I understand, especially that old school mentality of, oh, let's better not open this can of worms. If we open the can, you can't put all the popped foam pieces that explode out and put them back in. That's a mistake. I would urge everybody to really try and be ahead of their renewal cycles. If you get too far down the path, you can get stuck. And the most frustrating thing in the world is to think you're waiting on something that's going to be just a simple renewal and your rates won't change much, and then you get it at the last second and it's jumped to the roof. And it's, please also remember, it's not always malicious. Just like our customers have a lot on their desks, we have a lot on our desks, and sometimes you'll miss something and you'll go, oh crap, man, I really have to take care of that actually. And they do need an increase this year. But I think who you do business with matters, and your explanation of the relationship with the shipper, that's exactly how you need to pick your partners, not just from a insurance agent perspective, but you need to know and understand that insurance agent's relationships. To be totally honest, and I hate saying this on a podcast, but there's people we'll do favors for and there's people we won't. And it's relationship driven. This is very much like freight and industry based on your relationship. And have I been out with that person all night long on a bender, helping get a customer across the finish line and, supporting them? And have I gone to the renewal meetings with them? And have they gone to bat for me on accounts? And what does that look like? And that relationship, that back and forth, is so critical when push comes to shove and you need something done. So I think you really want to make sure you pick your agent well, make sure they understand your business. And if you're sitting there today and you called your insurance agent and you asked them a couple of questions about your day-to-day business and they couldn't understand what you were talking about, or you had a difference, and you said, that deductible doesn't work for me because of on my cargo liability, because my LTL, that's a great example. You need a different solution for LTL. Most of the cargo liability policies carry $10,000, $25,000 deductibles. So if your agent isn't saying to you, hey, do you have a shipper's interest solution? Which TMS are you using? Do you want to embed it? Maybe you could drive revenue off of it. Maybe you could create a better relationship with your shippers. Those things are so important. And if they're not doing that, maybe you're not working with the right person. So first ask yourself, who am I trusting to place this for me? And is that the right person? And then take that next step of being proactive to plan ahead and get in front of your renewal as much as possible. And look for those red flags. If you're 5 days out from your renewal and you haven't gotten your quote yet, that's a red flag because you're likely going to get it and there might be some changes. But really look at the supplements you have, the coverages, and do your best to think through that when you're looking at the parties involved in your day-to-day. So your carriers you work with and everybody else. And practice telling your story in advance and be ready to tell your story and back it up. So, what happened? What did you change? How's it improved? For carriers, the basic thing I always kind of come back to is I'm like, can you actually send me your disciplinary policy? Mm-hmm. Show that you have one in writing, and can we talk about it? Can you explain how you make these changes? Because the turnover of drivers, the way you need to manage that process, it's really hard. And if I'm looking at it from an insurance perspective on their cargo policies and PD policies, you as a broker should be looking at things like that when you're trying to trust them. So if you're looking at a carrier and they've got tons of speeding violations and bad drivers on the fleet, if they don't have something like that, that's not going to change.
I think there's power in PDFs is kind of what I would say, because when we were doing a growing startup brokerage, we just documented everything. We documented like what our core carrier policy was. So if we were going to use a carrier on a contract lane on certain type of freight, like they had to have run 20 loads with us prior. They had to carry certain types of limits. We had to have certain processes in place with them. And we documented like our process for how we did consistent vetting through different platforms like Highway or different tools that were available. And we just kind of documented everything so that when we were having these conversations, it wasn't just talking at people. We could just kind of show like, hey, this is what our people are doing and this is how we're being responsible. But also, once you put it on paper, it becomes a little more real, and you can give that to your team and make sure that they're adhering to a process and following a process. So
that something you mentioned there. So people can do a lot more with the tools they pay for than they realize sometimes, and that's a great thing that we've had a lot of conversation with customers about. So Highway is an incredible tool, and you can do a lot with it to protect your brokerage, and it goes so far beyond that basic kind of carrier identity, because it really becomes how you can enforce those policies with your team. And we're all sales professionals in one way or another in life, and you don't realize it. And when you look at the team you've got around you, maybe they're making commission, maybe they're making more incentive for things. You want to have ways to have those walls up to protect the business. And that's a pretty powerful tool to do things like that.
Yeah. Awesome. Well, I'm guessing people might have some questions if they listen to this episode, or kind of might make them think about some things. If they want to get in touch with you or someone from your team, what's the best way for them to do that?
LinkedIn is a great way. I do a decent job monitoring my LinkedIn. If you want to reach out, if you want to send me an email, that's taylor.walker@loadsure.net. We've got a great landing page on our website as well, loadsure.net. Or have your insurance agents reach out. Hopefully they know who we are. We work with almost all of them. We're very neutral middle party in the market. And if you have anything that you need honest conversations about, we're happy to do that.
Awesome. Well, Taylor, thank you so much for being here today. I enjoyed the conversation. I definitely needed kind of a brush up. It's been a while since I've been in the brokerage space and had to deal with insurance. So enjoyed hearing kind of the latest of what's been going on.
Thanks for having me. Yeah, anytime.
Absolutely. And thank you to everyone who was listening in today. We appreciate you guys for meeting us for coffee.
Thanks so much for meeting us for coffee. I'm so excited to be partnered with Watco as our show sponsor. Not only was Watco founded in my home state of Kansas, but the solutions they provide are, in my honest opinion, unmatched. If you have questions about Watco, you can scan this QR code to connect, check out the link in the episode description, or you can shoot me a message on LinkedIn directly, and I'm happy to talk more. If you enjoyed today's show, I'd love if you could leave a rating on your platform of choice. We'll see you next time.